Most traders think success comes from knowing more. More strategies, more indicators, more information. But Richard Dennis believed something completely different. He believed success had nothing to do with knowing more and everything to do with doing less, but doing it consistently. He didn't rely on complex systems. He didn't try to predict every move. He didn't chase the market. Instead, he focused on something most traders ignore: behavior. Because he understood a simple truth: the market is not your biggest challenge. You are. That's why his entire approach wasn't built around finding perfect trades. It was built around controlling reactions, controlling decisions, controlling emotions. He followed rules. Not sometimes, not when it felt right, every time. And those rules were simple. Cut losses quickly, let winners run. Risk only what you can afford to lose. Never override your system. Simple to understand, but almost impossible to follow if your mindset isn't right. Because the moment a trade goes against you, your mind reacts. You feel discomfort. You want to hold. You want to avoid the loss. But his psychology was different. He didn't negotiate with the market. He accepted the loss immediately. No hesitation, no adjustment, no emotional reaction. And that's where most traders fail. Not in finding entries, but in accepting exits. Because taking a loss feels like failure. But to him, it was just part of the process. Nothing personal, nothing emotional, just probability. And when a trade moved in his favor, he didn't rush to secure profit. He didn't close early. He didn't interfere. He let it play out fully. Because he knew something most traders struggle to accept. Big wins require patience, and patience is uncomfortable. It means sitting through uncertainty, watching price move up then pull back, feeling like you might lose what you've gained. But instead of reacting, he stayed still. Because his confidence wasn't in the trade, it was in the process. And that's the shift most traders never make. They trust their feelings. He trusted his rules. That's what allowed him to stay consistent. Not because he was always right, but because he was always disciplined. And discipline changes everything. It removes hesitation. It removes overthinking. It removes emotional decisions. Because once you commit to rules, your job becomes simple. Follow them, no matter what. That's the psychology of Richard Dennis. Not complicated, not secret, but extremely rare. Because most people fail from lack of knowledge, they fail from lack of control. And until you build that control, no strategy will save you, no system will work, no edge will last. Because in the end, trading is not about the market, it's about who you are when money is on the line. And that's where his mindset becomes even more powerful. Because Richard Dennis didn't just follow rules, he detached from outcomes. He understood that a single trade means nothing. Win or lose, it doesn't define you. It doesn't validate you. It doesn't prove anything. What matters is the series, the repetition. The ability to execute the same way, again and again, without letting emotions interfere. And that requires a different way of thinking. Most traders look at a trade and ask, will this one win? But he looked at trading and asked, can I follow my system no matter what happens? That question changes everything. Because now your focus is not on being right, it's on being consistent.
And consistency removes pressure. You don't need this trade to win. You don't need to recover losses immediately. You don't need to prove anything. You just need to execute. And when you remove that pressure, your decisions become cleaner. You stop forcing trades. You stop hesitating. You stop reacting emotionally. Because now you're not chasing outcomes, you're following a process. And that process includes losses, plenty of them. But instead of avoiding losses, he expected them, prepared for them, accepted them. Because he knew something most traders ignore. Losses are not the problem. Uncontrolled losses are. That's why risk management was at the center of everything he did. He never risked too much on one trade. He never allowed one mistake to damage his account. He never tried to make it back quickly. Because once you start trading to recover, you stop trading logically, you start trading emotionally. And that's the moment you lose control. So instead of reacting, he stayed disciplined. Even after losses, even after wins. Because wins can be just as dangerous. They create overconfidence. They make you feel invincible. They push you to take bigger risks, break rules, do more. But his mindset didn't change. Win or lose, same behavior, same discipline, same execution. That's what made him consistent. Not intelligence, not prediction, but stability. Because when your behavior is stable, your results become predictable. Not in one trade, but over time. And that's the real edge. Not finding better trades, but becoming a better executor. Because the market will always change. Conditions will shift. Patterns will fail. But if your mindset stays the same, you adapt, you survive, you stay consistent. And that's what separates traders who last from those who don't.
And that's what most people misunderstand about Richard Dennis. They think his success came from a special strategy, something unique, something they don't have. But the truth is, his edge was not in what he traded. It was in how he behaved while trading. Because the rules he used were not complicated. Trend following, risk control, letting winners run. Simple ideas, available to anyone. But here's the difference. He didn't change them. He didn't adjust based on fear. He didn't override them based on emotion. He followed them exactly as they were designed. And that's where most traders break. Not because the system fails, but because they can't stick to it. They follow rules when it's easy. They break them when it's uncomfortable. They stay disciplined when they're winning and abandon everything when they're losing. And that inconsistency destroys any edge they had. But his mindset didn't allow that. He didn't treat trading like a series of emotional decisions. He treated it like a business. Structured, controlled, repeatable. Because in business, you don't change your process every time something goes wrong. You refine it. You stick to it. You improve it over time. And that's exactly how he approached trading. Not as a game, but as a system of decisions. Each trade was just one execution, one step in a much larger process. And once you start thinking like that, everything slows down. You stop reacting, you stop rushing, you stop needing immediate results. Because you understand success is built over time, not in one moment. And that mindset removes one of the biggest problems traders face: impatience. Because impatience makes you act early, it makes you close too soon, it makes you chase what isn't there. But patience keeps you aligned, keeps you focused, keeps you consistent. And that's why his approach worked.
not because it was perfect, but because it was followed perfectly. And that's the part most people ignore. They search for better systems instead of becoming better at executing one. But until your behavior matches your strategy, nothing will work. Because in the end, trading doesn't reward knowledge, it rewards discipline.
And that's why the lesson from Richard Dennis goes deeper than trading. It's about control. Control over your actions when pressure is high. Control over your decisions when emotions are loud. Control over yourself when the outcome is uncertain. Because that's when most traders lose it, not before the trade, but during it. You can plan perfectly, mark your levels, define your risk. Everything looks clear before you enter, but once you're in the trade, everything changes. Price moves, your emotions react, your thoughts start racing, and suddenly that clear plan doesn't feel so clear anymore. That's where psychology takes over. That's where discipline is tested. And that's exactly where his mindset stayed the same. He didn't adjust based on feelings. He didn't react to every movement. He didn't let temporary discomfort change long-term decisions. Because he understood something critical. Feelings are temporary. Rules are permanent. And if you let temporary feelings control permanent decisions, you lose consistency. So, instead of reacting, he stayed committed, even when it felt wrong, even when it was uncomfortable, even when doubt showed up. Because discipline is not about feeling confident, it's about acting correctly without needing confidence. And that's a different level of control, one most traders never reach, because they wait to feel ready, they wait to feel sure, they wait to feel confident. But trading doesn't give you that. It gives you uncertainty, again and again. And if you rely on feelings in an environment of uncertainty, you will always hesitate, always second-guess, always interfere. But if you rely on rules, you remove that problem, because now your decisions are not based on how you feel, they're based on what you decided before the trade, and that creates stability. You enter when your setup is valid, you exit when your rules say so, you accept losses when they come, you let winners play out. No negotiation, no adjustment, no emotional interference. And that level of execution is what creates consistency. Not perfect trades, not perfect timing, but consistent behavior. Because once your behavior is consistent, your results begin to reflect it, not instantly, but over time. And that's how real traders think, not in moments, but in sequences, not in emotions, but in systems. And that's the psychology that made Richard Dennis successful, not a secret, not a shortcut, but a standard of discipline that most traders know, but very few actually follow. And that standard is where everything comes together. Because at some point, you realize something most traders never fully accept. There is no secret, no hidden indicator, no perfect entry, no strategy that removes uncertainty. What exists is a process, and your ability to follow it. That's what Richard Dennis built his success on. Not certainty, but structure. Because structure gives you something emotions can't. Consistency. When you know exactly what to do and you actually do it, you remove confusion,
You remove hesitation. You remove the need to guess. And once that happens, trading becomes simpler. Not easier, but clearer. You stop overthinking every move. You stop reacting to every candle. You stop trying to control the market. Because you understand, your job is not to control outcomes. Your job is to control your actions. And that's where most traders get it wrong. They try to control what they can't and ignore what they can. They try to predict the market, but fail to manage themselves. And that imbalance is what keeps them stuck. But once you flip that, once your focus moves from prediction to execution, everything changes. Now, you don't need to be right all the time. You don't need perfect entries. You don't need constant wins. You just need consistency. Consistency in how you enter, consistency in how you manage risk, consistency in how you exit, consistency in how you behave, no matter what the market does. And that's the mindset that lasts. Not emotional, not reactive, but controlled. Because in the end, trading is not about what happens on the chart. It's about what happens inside you while you're watching it. And if you can control that, if you can stay disciplined, if you can follow your rules without breaking them, then you don't just have a strategy, you have an edge. The same kind of edge that built the success of Richard Dennis, and the same edge that most traders spend years searching for, without realizing it was never outside. It was always within.
And when you finally understand that, everything becomes simpler. Not easy, but simple. Because now you're no longer searching. You're no longer jumping from one idea to another. You're no longer trying to fix your results with new strategies. You're focused on one thing: execution. And that's the shift that defined Richard Dennis. He didn't try to outsmart the market. He didn't try to predict every move. He didn't try to avoid every loss. He accepted the game for what it is: uncertain, imperfect, unpredictable. And instead of fighting that, he built a way to operate within it, with rules, with discipline, with consistency. Because once you accept uncertainty, you stop reacting to it, you stop fearing it, you stop trying to control it, and you start focusing on what you can control: your decisions, your actions, your behavior. And that's where your edge is built, not in the market, but in how you show up in it. So, here's the lesson. You don't need a better strategy. You need better discipline. You don't need more knowledge. You need more consistency. You don't need to predict the market. You need to follow your rules. Because the truth is simple. The system doesn't fail. People fail to follow it. And the moment you take responsibility for that, the moment you stop blaming the market, the moment you commit to executing your plan exactly as it is, that's when everything starts to change. Not overnight, but steadily. Because now you're no longer trading based on how you feel. You're trading based on what you decided. And that difference is what separates struggling traders from consistent ones. That was the mindset of Richard Dennis. Not complicated, not hidden, but powerful. And if you can apply even a part of it, you won't just understand trading better, you'll start executing it better. And that's where results begin.